The financial markets have always been a battlefield of speed, strategy, and intelligence. For decades, human traders relied on instinct, experience, and raw data to make decisions worth millions. But the landscape is shifting at an unprecedented pace. Two revolutionary forces are now competing for dominance in the world of trading: artificial intelligence and quantum computing. These are not distant concepts from science fiction. They are active, evolving technologies reshaping how money moves across global markets every single second. Understanding the difference between these two powerhouses is no longer optional for serious investors and finance professionals. It is essential. The race between artificial intelligence trading and quantum computing trading represents one of the most fascinating technological competitions of our time, and the winner could redefine wealth creation for generations to come. Artificial intelligence trading systems operate through machine learning algorithms that analyze enormous volumes of historical and real-time market data. These systems study stock charts, identify patterns invisible to the human eye, and execute trades in milliseconds. Imagine a robot sitting before thousands of screens, processing every price movement, every earnings report, every social media sentiment signal simultaneously. That is essentially what an artificial intelligence trading engine does. These systems continuously learn from new data, refining their strategies without human intervention. Deep learning models can detect subtle correlations between seemingly unrelated assets, giving traders a significant edge. High-frequency trading firms have deployed artificial intelligence to execute millions of trades per day, capturing tiny price differences that accumulate into massive profits. The technology is already deeply embedded in hedge funds, investment banks, and even retail trading platforms. Artificial intelligence has democratized access to sophisticated trading strategies that were once exclusive to Wall Street giants, making powerful tools available to a much broader range of market participants. Quantum computing trading operates on an entirely different level of computational power. While artificial intelligence uses classical processors to crunch numbers sequentially or in parallel, quantum processors leverage the principles of superposition and entanglement to evaluate countless possibilities simultaneously. Picture a quantum processor not as a single calculator, but as millions of calculators all working in perfect harmony at the same instant. In financial modeling, this translates to solving optimization problems that would take classical computers thousands of years to complete, finished in mere seconds. Portfolio optimization, risk assessment, derivative pricing, and arbitrage detection become exponentially more powerful when quantum computing enters the equation. Financial institutions like JP Chase and Goldman Sachs are already investing heavily in quantum research, recognizing that the first firm to achieve practical quantum advantage in trading will hold an almost insurmountable competitive position. The quantum processor is not just faster, it thinks differently, approaching financial problems from dimensions that classical systems simply cannot access. When placing artificial intelligence trading and quantum computing trading side by side, the differences become striking. Artificial intelligence excels today. It is deployable, scalable, and already generating real returns across global markets. Stock charts processed by artificial intelligence reveal momentum signals, reversal patterns, and volatility clusters with remarkable accuracy. Quantum computing, however, remains largely in its developmental phase for commercial trading applications. Current quantum processors are fragile, requiring temperatures colder than outer space to function, and error rates remain a significant challenge. Yet the theoretical ceiling of quantum computing trading dwarfs anything artificial intelligence can achieve alone. The most exciting frontier lies in combining both technologies, artificial intelligence algorithms running on quantum hardware, creating a hybrid system of unimaginable analytical power. This convergence could make today's most advanced trading robots look like simple calculators by comparison. The financial markets of tomorrow will be shaped by whichever technology matures fastest and integrates most effectively into real-world trading infrastructure. Artificial intelligence will continue evolving, becoming more sophisticated, more autonomous, and more deeply integrated into every layer of market activity. Quantum computing will gradually overcome its engineering challenges, and when it does, the transformation will be seismic. Investors who understand these technologies today position themselves ahead of a wave that will redefine risk, reward, and market efficiency on a global scale. The robots analyzing your stock charts today are already extraordinary. The quantum processors being built in laboratories right now are preparing to make them even more powerful. The future of finance is not human versus machine. It is a relentless pursuit of computational perfection, and that future is arriving faster than most people realize.